Here with more on whether the rally can continue, KraneShares Chief Investment Officer Brendan Ahern. Brendan, it's great to have you here on set, and that's exactly where I'm going to start with you. Can it continue? And how much of this hinges on more stimulus from China?
Yeah, 100%. We think investors should be looking through the windshield, not in the rearview mirror, because we've seen the monetary policy bazooka unleashed. The fiscal policy bazooka has yet even to occur. So we think over the next few weeks, certainly by the end of the month, you're going to see an articulation of what they're going to do. Is it consumer vouchers? What are they going to do to get domestic consumption up? That has not been articulated thus far. So a lot more good news coming.
Yeah, I was speaking to Mark Movius on Overtime a couple of weeks ago, and he was bullish on China. And one of the points he made is that it's really the Chinese that drive the mainland China markets.
Yes.
Whereas I think here, we have much more global play. So how much does that matter?
It matters a lot. In terms of, K-Web, obviously our flagship fund is really focused on the growth stocks outside of China. But I think you also have to look at the Shanghai and Shenzhen stocks. That's predominantly owned by investors in China. So that's kind of, for us, it's KBA or MSCI China A. That I think next Tuesday is going to be like nothing you've ever seen. 60 brokerage houses have announced that they're staying open during this national holiday in order to open brokerage accounts. You have the PBOC had said they're going to give 500 billion RMB, so call it 7 billion, to mutual fund families, insurance companies abroad to buy stocks. And if that doesn't get the Shanghai, Shenzhen, the KBA market up, they're going to give them another 500 billion. If that doesn't get it up, so it's. There's a lot coming, and I think a lot of good news coming. Just this is going to affect the economy. It's going to be a very positive effect. That'll take time, but good economic numbers coming. That'll flow into the balance sheets of the companies we hold.
Do you think they're limited by their debt?
I think they don't have a supply problem. They have a demand problem. So, yes, I mean, debt, particularly on the real estate side, is why you're seeing all of this policy support. But government debt is only 60% of GDP. So the government has a huge amount of leeway in terms of dry powder that they can unleash. They're only running about a 2% budget deficit. That could double or triple. All, I think, very much focused geared to the consumer.
You think they're targeting asset prices or confidence or youth unemployment? Or what do you think is the target?
All of the above.
Really?
I mean, they've actually, in the statement out last Thursday from President Xi, he actually explicitly said employment is a problem, acknowledging it. They know real estate prices have really weighed on consumer confidence, weighed on the consumer, and so they need to stabilize. They need to get those prices up. But then we still haven't seen what they're going to do to stimulate the consumer. Is it free money? I mean, I don't think they're going to do the full modern monetary theory, like helicopter money here, but they're going to do something, and that's going to be a very good headline as it comes out in the next few weeks.